Hello and welcome. I'm Quinn Milligan.
And I'm Drew Milligan.
And this is The Capital Call, episode 10, in fact. What a milestone.
Yeah, big 1-0. We've got double digits now.
Yeah. In fact, so many episodes so that we went back to the original format here, a little bit closer in.
Yeah, a little bit higher resolution, closer to our faces so you can observe our beautiful mugs.
Oh, yeah. And for those who don't know, stick around to the end of this podcast. We will have a very interesting set of this day in economic history that is all news to Drew.
Yeah, exactly. Always news to me, never news to Quinn.
A lot of interesting things this week, as there always is, right? But let's tackle them one at a time. I think at the top of a lot of people's mind is this feud between Musk and Trump. And I just kind of wanted to start.
Yeah, the parents are fighting.
Yeah, the parents are fighting. Tesla's down 15% on the week. I just wanted to point out a couple of the tweets are crazy. He basically said, I wish you would. And Trump wants to take away all the subsidies for all of his companies and yada, yada. The funny thing is, and I think Steve Bannon talked about nationalizing SpaceX.
I can't think of a worse way to make the company. I can't think of a better way to make the company produce nothing of value for years to come. I mean, we've just proven that the second you let the government get its hands on manufacturing capabilities, they do deliver the objects, but you get so many fingers in the pie that it's like, the Space Launch System, which is derogatorily termed the Senate Launch System, has its manufacturing distributed across all 50 states with Boeing in kind of nonsensical ways, such that the final delivered product is like multiple decades behind schedule, multi-dozens of billions above budget. It's just, I don't want to know what SpaceX would look like if it was private.
And there was a lot of other things hurled at each other. There's a bunch of accusations and people now saying they can make negative comments on the tariff plan now that Musk is off of it. And, I kind of wanted to point out, we could get into that as like a reality TV show.
I hate it. It's a reality TV show I can't turn off.
Yeah, with real monetary implications for your portfolio, unfortunately. But I wanted to point out the Tesla valuation in comparison to its peers, because I think it's valued almost as like a tech company, because it's at 100 plus times earnings or something stupid.
Yeah, it's always had kind of a rich valuation, and there's a few different reasons for that, but primarily it's because people view Tesla as the future, and the fact that it had Elon Musk's name attached, so it's kind of become a proxy for his reputation in a way.
Right.
Although, it might bear reminding people that Tesla was not actually started by Elon. It was started by another guy, and Elon came in later. So he's kind of used his star power to rocket that ahead of the competition.
Pun intended.
Right. And, SpaceX even is run by Gwen Shotwell, who has done an excellent job operationally, as far as I can tell.
Yeah. And SpaceX is like a money printing machine. They don't need government subsidies at this point.
If JP Morgan is to be believed, that they've got that market on lock and it's wildly profitable for satellite internet, low latency. Until SpaceX came around with its reusability, it was really just not possible to create a satellite constellation like that close to the ground. Legacy satellite infrastructure from things like Iridium would have normally taken the geostationary route, which the problem with that is it's so high that you have really, really high latencies. So, it's got to go not only to space, it's got to go to space plus 3 and then come back. Because they couldn't afford to send up more than it was more cost effective to send them up one at a time in these giant omnibus satellites that would do a lot of things all at once, which is also why you got super low connectivity speeds from the geostationary satellites. It used to be that if you were on the island of St. Helena or Tristan da Cunha, you could not get decent internet.
Yeah.
I remember there was a whole kerfuffle when there was a transcontinental cable being laid from South America to Africa, where St. Helena was lobbying, which is an island in the Atlantic, for the cable to be kinked just a little bit, so it just got just close enough to the island, but it was going to add $1 billion or something like that. So I don't know if they ever did it.
Jeez.
Anyways, totally obsolete now, at least for those remote areas with not a lot of people.
Yeah. And then as far as Tesla, as a car company, when you compare it to the big three, Ford, GM, and what was Chrysler, now Stellantis. Whereas Tesla's like 100 plus times earnings. Ford and GM, they're like
So like a tech company.
yeah, Ford and GM are like 6 or 8. Stellantis is at 4. I just have a hard time. They have to do so much to overcome being a car company.
I mean, they have to come out with the robots. That's what they basically have to do to grow into their multiple. Other than that, people are essentially betting that they're going to own the car industry because they have first mover advantage, which I'm not even sure if they'll own the electric car industry with the way BYD has been eating their lunch internationally.
And it was kind of inflated as a proxy investment into SpaceX because it's a private company. And, I heard through the grapevine that people were offloading their investment in X by saying you get my piece of SpaceX, but you have to invest in formerly Twitter, but X as well.
Yeah, allegedly some of the institutions are offloading their the website formerly known as Twitter with some of their other investments. So
so maybe that same kind of principle that they used with Tesla and SpaceX, and it just is like an association thing. But Stellantis, we like. Full disclosure, we're invested in Stellantis, whether we like it or not.
I hate the name.
The terrible name. I think the whole switch to this like global brand about. I was looking into the origins of Stellantis, and it's like it means of the stars, and it's supposed to be Latin to kind of an homage to the Roman Empire kind of thing, like the globalness of them. I don't know. I feel like they should have used they have so many good brands. They got Chrysler, Jeep, Dodge, Ram, Renault, Vauxhall, Maserati. Fiat, Alfa Romeo, you name it. There's so many better options than Stellantis. But our personal opinions aside, and I think that's part of their branding image, you look at their books, and relative to its competitors, they are doing so well. And people misunderstand that they're going through a transition where there's a gap in their model years. They got rid of old inventory. They're trying to fix the issues where their dealers were angry at them. But on paper, it looked like their inventory was dwindling. But in reality, they're just going through a transition.
Right. They had a gap in their model years, which was just, and then also they kind of screwed up the previous model years that they did release, which meant that their dealerships were all sitting on excess inventory they had to work through.
Yeah.
So, even shipping out the new models wouldn't have necessarily helped all that much. They just kind of would have wound up clogged.
And they had to rethink some of their image and really focus on what they have at hand.
They did. And they also had that dinky little Maserati. Is it Maserati brand or is it a...
What dinky little Maserati brand?
I'm just saying, like, it's dinky compared to the rest of their total revenues. I look at that company's reporting and they report, oh, look, we've got North America, we've got South America, we've got Europe, and we've got Middle East and Africa. And then there's like this little tiny little brand here that they've got separated off from everything. And I understand it because it's a luxury, like, supercar brand, basically. But, like, it's like $1 million of revenue or something like that.
I don't think it's that little.
It's pretty small.
But I wouldn't call it dinky. I mean, it's like a globally recognized brand. It's just a small segment. But I understand. They spun out. They had Ferrari. They spun that off as a public company. And I think Maserati probably would do well spun off. Funny enough, the family that owns a large chunk of Stellantis still owns a large chunk of Ferrari, right? I mean, they probably made a boatload off of that transaction. But the other thing about Stellantis, you look at tariffs. People, obviously with cars, are concerned about the import car tariffs, steel tariffs, part tariffs. There's no such thing as a wholly American-made car, not even a Tesla.
Right. Although Tesla was the only one that qualified under the Made in America rules for having most of the car built or assembled in the U.S., interestingly, which they're now trying to kind of get rid of to a degree.
Right. But if you look at Stellantis, I mean, they've got a ton of American manufacturing. I mean, people forget this is largely, I mean, it's a global brand, but a huge portion of their company is American. And their ability to produce in the States is substantial. But their worldwide exposure gives them a more comprehensive opportunity, diversification for revenue growth.
I mean, you buy Stellantis, you're basically buying the equivalent of like 6 different car companies all rolled into one.
Yeah.
You're getting the old Fiat, the old Peugeot, the old Chrysler. You're getting Maserati. You're getting everybody else they've acquired over the years. It's just kind of hard to see these guys. I would never say too big to fail, because that is a fraught term these days, but it's, there are certain risks that it's a little bit less risky maybe than some of the other names
They have
at these valuations.
Yeah, they have a good enough balance sheet to where they can screw up for a very long time and it wouldn't matter.
Right.
But they have already screwed up enough that they've recognized that they need to change. And the likelihood that they're not going to get their act together in the next few years is so low. I mean, they already picked a new CEO, the guy that was former guy with Jeep that's been with the company for 25 years. And I think they're on the right path.
Yeah, they're even going to quarterly reporting for the first time in forever.
They have,
or ever, really.
They went to this stupid half one, half two reporting.
It's because they were, in the merger, they went with a European parent company. So they did maintain the quarterly reporting from the Americans.
Companies always talk about, we'll just go to every 6 months we'll report items.
Every year?
Yeah, every year. Because it's just a hassle for operations. But the thing is, if you're a publicly traded company, if people don't, the management doesn't like to answer questions, right? Because they're going to get tough questions. But if you don't answer those questions in a public forum, the investors are still going to ask those questions. They're just not going to get an answer from you. And they're not going to get your narrative. They're just going to make up answers. And there's going to be speculation for 6 months instead of 3 months.
This is why it's important to control rumors when they get out there. If you can't hide under a rock, especially not in the public markets. I mean, when there's real money on the line, people are going to make decisions whether you want them to or not. So I remember we were in talks with one company, and I won't say the name, but we were in talks with one of their CFO guy, whoever it was.
Investor management or whatever.
And they were trying to make this argument like, well, we don't really want to accept questions from just anybody on the call. And, we really just want to, handpick our analysts. But I was listening to these guys' calls, and they're getting one, maybe two analysts on the call. And they're not asking the questions that the market is asking. They're asking, hyper-specific questions for their specific portfolio strategy, which is not what necessarily people are trading on. So
yeah, and I get it. There's tough questions, and you're going to get questions from that you don't like as management. You're like, this is a dumb question. But again, they're still going to ask those questions. You just don't get to answer them.
Right.
And it's to your benefit to frame the narrative and clarify. If you think it's a dumb question, clarify why there's a different framing.
Yeah, there's also another thing I notice with investor relations folks is that they'll sometimes take it a little bit personally that they get the same questions over and over again with every single call. But this is something that I see even just when people are interacting on social media in any subject, in any discipline, is that they take on this psychology that this is the same person, the media, the public, asking them the same question over and over again. And how are they not understanding this? I've already answered this a million times, but no, it's the reason they're asking it again and again is because it's usually a new person every time that may not have never talked to you before. You just don't realize it. So
and notoriously, even if it's the same person, investors have short attention spans. Yeah. They don't remember things.
I usually like to typify your average investor as an idiot in a hurry. They only have space for so much information, and odds are they're looking at so many other different things that they're just barely giving your company a glance.
Yeah.
So you got to be prepared to capture that attention and answer those questions when they are presented.
So happy to see Stellantis going to quarterly, and they're making the right decisions. Book value alone is like $30 on that guy, and it's trading below $10. I mean,
it's at first I hated ourselves when we were looking at this company. Like, why are we looking at this? This is I don't like what these guys are doing necessarily, but then they got so freaking cheap. I can't, there's a certain point at where you're just picking up dollars off the ground.
Yeah.
So,
and you don't buy a company just because you like it. Don't short a company just because you hate it, because anecdotal personal opinions are not great ways to make investments.
I would attest to that.
And oftentimes boring is okay. Now, another thing that's really weighing on the market, obviously, is all this trade business. The U.S.-China trade talks are scheduled for Monday, June 9th in London. And this will actually Today, by the way, is after close on June 6th, right?
Good old 6-6.
Yeah, but when this comes out, it will be that same day. So it'll be very interesting to see if something productive actually comes out of this.
Yeah, the Trump administration has been hinting very heavily that they've got some sort of deal in the works. And it's hard to know whether to take them seriously because he's made these sorts of announcements before where he's given like a hint and then it turned out to like just be a big nothing burger. Like we're still in the, also, by the way, I don't know if you noticed, we're still 90 days into a 30-day pause on tariffs with some countries. So that like the Mexico tariffs that he said he announced a 30-day pause and then we just never heard anything again. It's
it's a good point.
It's very inconsistent messaging on exactly what is going on vis-a-vis trade or negotiations. You just don't know. And there's interestingly good evidence that sometimes what's happening with the messaging is you'll see this uptick in trading just before he says something. I hate to say it, but it looks a little bit like people in the administration are trading their own book, so to speak. So you just don't know.
Yeah.
I hate to say it, but the taco trade seems to work out pretty well.
Yeah. Just don't, don't mention it with the reporters in front of him because it'll just make him upset, apparently. But the S&P this week closed above 6,000.
It's fantastic.
The good old 6 handle. So interesting. In addition, oil prices are the highest since mid-May, about $63 a barrel.
Still not great, by the way. 63 is like, like it's not in the 50s, so it's not terrible, but it's also not like some countries really just rely on those high oil prices, like high cost producers like Venezuela or like Russia or something like that. Like it's just and the U.S. is a net producer now, so we actually want oil prices to be higher in a sense, even though we don't directly subsidize gas prices necessarily. So oil is very weird.
Yeah.
It's a much more diversified commodity than it used to be, I want to say. And also it's still critically important for energy and energy distribution, but not as much as it was in the past. There are kind of other like release valves that can be opened and shut if oil prices get too high or go too low. Which makes the market a lot more stable for energy, just generally.
I mean, oil gets expensive enough and suddenly they find more oil.
Yeah. Or, what I'm reminded of, Pakistan, interestingly, has a really, really high uptake of solar. And the reason I bring this up is because a big part of the reason for this is that the Pakistani electrical grid is criminally mismanaged. It's just not very robust. So in response to these hugely overinflated prices for energy, what is the consumer market has gone ahead and adopted rooftop solar at a much higher rate than a lot of other places in the world. So that is one of the release valves. If the cost of energy by fossil fuels gets too high or solar gets very, very cheap relative to it, you wind up just transitioning away from it.
Yeah. You find other alternatives, right?
Right. But it's not like the 1970s where you had no viable, like quick quote unquote alternative to turn to if things got too expensive.
Right. Well, we can always buy oil from North Korea, right?
Yeah. Do they even produce oil?
I doubt it. I
don't think they are.
I can't imagine they would be. Also, who would buy it? China?
I mean, yes.
Yeah, that's true.
Russia's not buying it. Russia's got plenty of oil.
Yeah. Another, and this happened just today, the U.S. labor, the payrolls increased by 139,000, better than expected. Unemployment remains steady, still at 4.2%.
Yep. Very low.
The economy is strong.
I've seen mixed reporting of this, and it is kind of unexpected for some folks because a lot of people expected a more immediate reaction to the tariffs, or they were doomsaying that, the world's going to end. And again, what I've learned from this is that if you're going to implement value-destroying tariffs, you should do so when the economy is already fairly strong and not when the economy is in a tailspin.
Yeah.
Because the economy apparently can absorb it to a certain extent. But the devil's advocate to this, payrolls and unemployment have more or less normalized to like 2019.
Okay.
At this point, there's no there might be some lingering effects of the pandemic, but at this point, it's 5 years ago. Year-over-year wage growth is even exceeding inflation right now. I mean, inflation right now in May, as of the last tick, was only up 2.4% year-over-year. That's a fourth of what it was when it was at 8% when you have the hangover from the stimulus packages. And apparently people were a lot more insensitive to inflation than we gave them credit for. People can handle unemployment ticking up because it's concentrated misery. Inflation is a tax on everybody. So everybody gets pissed.
Even if you're unemployed.
Even if you're unemployed. So wage growth is outpacing inflation. You're getting some reporting that they're expecting employers to hold off on hiring.
Yeah.
Just because there's a lot of uncertainty with the tariffs, and you are getting a lot of that, and some of this information is a little bit delayed. But what I found particularly interesting in relation to this is that if you look at the port congestion, I said this before, you are going to start to see a cliff in terms of Chinese imports starting in late April, early May, which is pretty much what we saw. And there really hasn't been a recovery of Chinese imports since then. So what this suggests to me, and there have also been price hikes directly because of the tariffs. Tariffs are inflationary. Can't produce bananas, at least not at scale in the U.S., so why are we tariffing bananas? So what you might be seeing here is you might be seeing a delay between when the imports came in and when they're sold. So for example, you could start to see a little bit more of an effect in starting in July, maybe as late as the Black Friday kind of season, depending on what exact product you're talking about. I mean, early in the year, is when companies take the deliveries for the stuff they'll sell for about 6 months from now, depending on what specific company you're talking about. So there may be effects baked in here that we don't see for quite a long time. But then actually the tariffs may even be lifted by then. Who knows?
But then again, if let's say that there's maybe a price hike 6 months down the road, but by then the tariffs are gone, I can't imagine some companies might just eat the temporary price increase in order to maintain competitive pricing.
They could. The other thing that I think is possibly more likely to happen, because the entire industry eats that more or less equally, and not entirely equally. The big guys can absorb it a little bit better than the small guys can, but they might raise prices, and then if tariffs come off, prices don't go down, and they just wind up with better margins.
Yeah,
it could be a good time to buy a retailer.
Yeah,
for that reason.
It's like a gas station. The price of gas goes up, and within the millisecond they'll raise the gas price. But as soon as the gas goes down, they take their time until they lower the price.
Our father used to tell us a story about him stocking the shelves when he was a teenager. And he was a teenager in the
70s.
The 70s, so the stagflation era. And he would go around and he would have a special tool for putting stickers on all the goods so you could mark them up real quick as soon as the management wanted the prices to go up. There was no special tool for removing those prices once prices stabilized or went down. It just kept them at the same price. So there's stickiness to inflation.
Yep.
When it does happen.
Another thing that was interesting, we've seen an increase in a lot of not only private equity activity, but IPOs. I think it was delayed a little bit by the so-called Liberation Day. But just the other day, what was this, yesterday, was the Circle IPO, which was particularly interesting to the street. They do USDC, the US dollar coin, similar to Tether's USDT, and had a blockbuster IPO.
Yeah, people were really, really into it. I think they were into it in part just because Circle's a little bit better. How do I put this? Better run, or they've got more licensing.
Yeah, regulatorily, especially in the United States. And an interesting thing that was pointed out to us was that there's no credit risk involved in stablecoin because it's a tracked transaction. So there's no chance of it being declined.
Right, which is very interesting with those same day clearing type transactions. Even in stocks, the market doesn't clear. NYSE doesn't clear same day.
Yeah,
they've got 2-day settlement. They talk about going to 1 day, but they still haven't done it.
Interesting thing about IPOs that I was thinking about, there's a lot of hype. Very few IPOs are significantly appreciated within the 6 months to 2 year time frame after the actual initial public offering.
That's why I'm always skeptical of them.
Yeah, typically you can buy it cheaper 6 months to 2 years down the road.
Here's the real problem with IPOs. You've got a salesman selling them. So if you're being sold, if we're being sold an IPO, I'm immediately suspicious.
I kind of disagree with that assessment though, because
I'm not saying I don't buy them. We do buy them from time to time, but like I'm just saying I have to overcome that suspicion.
Sure. But the part of the role of a broker who's pitching a deal is to make you aware of the deal that we wouldn't otherwise know about. So it's not necessarily like there's so many deals out there, and they just want to make you aware of one of them that you wouldn't otherwise be looking at. So I don't restrict it just because it's being sold to me. You know what I mean?
Yeah, and I get where you're coming from with that, because I'm reminded Oregon has something called the Oregon College Savings Plan, 529 plan. I forget if they're in other states.
There's other similar college saving plans.
Yeah, there's similar college saving plans. But one of the interesting things about it is that they specifically made it so that you could not earn a commission selling it, which meant that there was limited uptake and adoption of the program just because a lot of people just didn't know about it unless like their advisor mentioned it offhand.
Yeah.
So salesmen have a place. You just got to be careful sometimes, I think.
It's without a salesman pitching a deal, there's no activity in a market.
Right.
So, and you need a market for liquidity and access to capital.
Salesmen create the market. Yeah, that is true. Speaking of data, though, the one thing that's been kind of irking me this week is that you started.
You've been irked?
What?
You've been irked?
Yeah, I've been irked. IRKED. It's is that you're starting to see more effects of the hiring freeze. Like you're not the data is still fairly reliable right now, but you've had these conversations also. You'll talk to somebody and they're very skeptical of the data being reported on inflation or jobs or something like that because it happens to not match their specific ideology in the moment, or they may just be skeptical for other reasons. But by and large, as far as I can tell, the Bureau of Labor Statistics is the gold standard internationally for good, solid, verifiable reporting on unemployment and labor statistics. They're a great primary source. But as a result of the hiring freezes, they have lost a lot of their staff. And they can't replace people. There's some people that have been furloughed, and as part of that, it's not in the public data yet, but some of the more detail in the reporting numbers, specifically in producer price inflation, which is the purchasers index, what companies pay for intermediate goods before they're processed and finally delivered to the consumer. They pulled back a lot of data points. They pulled back from like 500 products that they're tracking in that. And then in the consumer price inflation, they've also pulled back from tracking prices at like Provo, Utah, and Buffalo, New York, maybe some other cities. This starts to cause worries for the integrity of the data being published. Like right now, as far as I can tell, it's fine. It's still the best you're going to get out there, but it could be better. And there's really no reason why they've had to pull back on some of their tracking of prices. And it means that in the future, if it gets worse, you start to not be able to rely on the inflation data. And that's kind of scary because it's at the base of so many fundamental calculations, including the Federal Reserve's decisions as to whether to cut or to raise rates, which affects everybody. So there's just no reason on God's green earth to not be hiring for the Bureau of Labor Statistics.
Yeah, and it's not even a matter of like hiring new people. It's like you have turnover. You got to hire.
Yeah. I mean, people retire.
Yeah.
They die. They switch jobs for no reason, It's not great. I mean, we're also seeing this even with the Weather Service. They're sending up like a third of the balloons or a sixth or something of the weather balloons they normally do.
Yeah,
I don't know what they're going to do for hurricane season. I'm expecting hurricanes to go all over the place. We might get a hurricane in Oregon this year. Who knows?
Well, don't you know the head of FEMA said that there is no hurricane season?
He claimed that was a joke, by the way. Not sure if it was a joke.
Yeah, we'll see. On that note, I think it's about time for this day in economic history. So
let's hear it.
Yeah, I've got some interesting stuff for you guys. And again, Drew is not aware. He might be aware of them, right? I mean, he knows some things, but
I know everything, Quinn. Don't you know?
but I know everything. How can that be true?
Will the answer to this question not be yes?
What?
Yeah, exactly.
Anyways, so I've got a few things, and then one thing I wanted to go a little bit more in depth today. By the way, it's June 6th is D-Day.
Yep. Yeah, there was a lot of D-Day history posts, and I saw today.
Yeah, 1944. But, and as always, I got a couple that aren't really economic, but I thought they were notable. So June 6th, year 913.
Really digging deep for this one.
Oh, yeah. Constantine, if I can read Roman numerals, the 7th, becomes Byzantine emperor. Yeah, you can't look at this. What are you talking about? Okay.
Trying to verify you're reading the Roman numerals correct.
Hey, that's a secret. Trade secret. Okay, so June 6, 913, Constantine the 7th becomes Byzantine emperor, sort of. He was 8 years old, and he was named emperor under a regency council. But this early version of centralized fiscal stewardship shows ancient power transitions had major economic implications because the regency controlled the economic policy of the Byzantine emperor while he was 8 years old. It's interesting.
So, when did he come of age? Was it 16? Was it 18? Was it just whenever he kicked him out? Don't know.
It's a good question. I don't know the answer to.
Question.
Let us know in the comments.
Let us know.
And June 6th, 1822. So Alexis St. Martin is accidentally shot in the stomach, and physician William Beaumont uses his wound to study digestion. And this was one of the first major breakthroughs in understanding digestion. It helped launch experimental physiology in the U.S., science done without labs or budgets. It was just an open wound and a lot of curiosity.
I remember, I actually read about that specific case. I'm aware of that.
Really?
I've read about this actually multiple times. My understanding is the man who was shot in the stomach actually did not appreciate being experimented on. He had like a cork, kind of gruesome. He had a cork that, they would pull in and out, and the doctor would dip I'll dip some chicken in and see how this stomach works. And the guy kind of got sick of it past a certain point.
Yeah,
it was so important that coercion or other means, he stayed on.
June 6th, 1889, the Great Seattle Fire. A glue pot tips over and burns 25 city blocks to the ground in Seattle's downtown. The fire triggers massive urban redevelopment construction, laying the groundwork for modern Seattle's growth.
What year was this?
1889.
1889.
Everything was made of wood back then.
A lot of fires. Chicago Fire was, I think, a little bit before then, a little bit after. You know what that reminds me of, though? There is actually a city here in Oregon that was rebuilt from the ground up. Several cities that were rebuilt from the ground up, including a few that washed away in the floods. And
at least one city that burned down a few years ago.
Oh, yeah, Phoenix, wasn't it?
Yeah, Phoenix, Oregon.
Phoenix, Oregon, rose from the ashes.
It's terrible.
But it reminds me of Roseburg, whose downtown actually blew up in the 1950s. And leveled it. There was I believe it was a fertilizer truck or was it a dynamite truck?
It might have been both.
There was a truck full of something explosive that sat downtown that caught on fire.
Yeah.
Not a great result.
Yeah. And no peeking. No peeking.
I'm not looking.
You're looking. No peeking.
Oh, did I guess the next thing you were going to talk about?
No, you didn't.
Okay.
June 6th, 1925. This is directly related to something we actually just talked about earlier in the podcast. Walter Chrysler establishes Chrysler from the remnants of Maxwell Motor Company, and it would become one of the big three automakers.
Fantastic.
Yeah.
I like that.
Now Stellantis. Terrible name. They should have used Chrysler. Hell, I would have preferred Maxwell Motor Company.
It's a fun hobby tracing the lineage of all these mergers and acquisitions over time. I can think of a few companies that they've gone private, gone public, gone private, gone public several different times. Wall Street seems to like trading these companies around because it generates, I don't know, a little bit of alpha for them. The investments, I'm not as clear on it.
Yeah. So June 6th, 1933, first drive-in movie theater ever opened in Camden, New Jersey. They charged 25 cents per car.
Sounds steep for the year.
Yeah, Depression era.
We actually have, for those not aware, a drive-in movie theater not far from us in Newburgh.
Shout out to 99W Drive-In.
Yeah.
Sponsor us. June 6, 1978. Drew, you will love this one. California passes. Stop peeking.
I'm not peeking.
I could see you looking at it.
Okay, I'm going to look the other way, and you're going to tell me what it is.
So June 6, 1978. You'll love this one. Again, California passes Proposition 13.
Got to be one of the worst laws ever passed.
Yep, Prop 13 caps property tax rates and restricts future increases, gutting municipal revenue across California. It restructured their public finance. Also inspired similar measures throughout the
Including
nation.
Measures 5 and 50 here in Oregon.
Yep. And now we're
Also not great.
now we don't have enough money for our schools.
Yeah, Oregon is ranked number 47 in overall education quality.
Yeah. Listen, I hate taxes. Don't get me wrong. Just don't know if that's the best way to structure it.
Yeah, some people these days want to get rid of property taxes altogether, particularly in Florida, and I don't know if they quite understand the implications of that. You know, I remember talking to an older fellow. I believe you were with us when we had that conversation. He wanted to exempt older folks who don't have kids from the education property tax because they don't have kids, which in retrospect, I wasn't rude to him or anything at the time, but I just kept thinking about it later. I'm like, do you not understand? You get benefit of education, of living in an educated society. You know, people that take care of you, invent drugs for you when you're in your old age. And
Yeah, I get the sentiment, though, I suppose.
I get it. I just don't agree with it.
June 6, 1984. Tetris is released in the Soviet Union by Alexei Pajitnov. It spreads internationally. A rare Cold War success story.
Yeah.
Yep.
They made a movie out of it, too.
Yep. June 6th, 2018, Xi'an, China introduces a special sidewalk lane for people walking while glued to their phones.
What does that even mean? Isn't that just a regular movie sidewalk?
No. It's just a lane on the sidewalk where if you're on your phone, you're supposed to be in that lane.
It's a travel lane.
Yeah.
Okay. Good for them, I guess.
I thought it was
They got enough
strange.
people walking around that it was an issue. Yeah, go, John.
Xi'an, China.
Xi'an.
Yeah, I thought that was crazy. Okay, so June 6th, 1934, the Securities Exchange Act was signed into law by President Franklin D. Roosevelt.
Hell of a lot. Hell of a lot.
It's got, people love it, people hate it. It's got good and bad, but it happened. This obviously established the SEC. It was the second major pillar of financial reform after the crash in 1929. It followed the Securities Act of 1933, which regulated the issuance of new securities, but that only addressed initial offerings, IPOs, that kind of thing. And the Exchange Act of 1934 dealt with the secondary market where securities are bought and sold. And so it created the SEC to enforce rules, oversee markets, and ensure fairness for investors. Now, before this, stock trading was virtually unregulated. It was
It was a Wild West.
Wild West. There were no formal mechanisms to stop insider trading, which some people argue isn't really a thing. But there's no rules.
Whoa, you can't just gloss over that. What do you mean it's not a thing?
Well, I've heard legitimate arguments where it's like, is insider trading really a thing? I mean, we don't regulate it for Congress people. I mean,
Well, yeah, because they exempted themselves from the law.
it's just the first people to get information. I mean, it is a thing.
I understand the argument. Like, it's just information. If you get access to it before everybody else, you're making the market more efficient, right? It's like high frequency traders. They get to see the blip before everybody else by making their lines a little bit straighter to the exchange.
But it's supposed to ensure fairness. I get it. So I don't know. I'm not a
But
regulator.
here's a real problem with insider trading. Here's a problem with stock manipulation, because you're trading on non-public information that other people don't have access to, and you're buying and selling from real people on the other side of this transaction, and you're leveraging this information asymmetry to make a profit on these other people's on the other side of the trades dying, basically.
Yeah.
And stock manipulation specifically, where you try to boost up a stock, it's literally just theft.
Yeah.
Because you're convincing people to either buy or sell on false information.
Especially if you're an insider, because then you can manipulate the release of information too.
Right. Like you could hint that you're about to do something, or you could tip off your buddies, hey, we're about to announce this thing 24 hours beforehand, and they all get in before everybody else. Like
But thank goodness to the Securities, the SEC Act of 1934 that never happens anymore.
I will say it is a privilege to get accused of insider trading when you have not been insider trading. It's like getting kicked for cheating in an online competitive video game when you're just really good.
But before then, there was no rules around disclosure, no centralized enforcement, and investors were often manipulated by pump and dump schemes, misinformation, manipulation. The Exchange Act gave the federal government sweeping new powers. Public companies had to file regular reports, 10Ks, 10Qs. Exchanges and broker-dealers were now registered and regulated. Fraud, market manipulation, and insider trading became enforceable offenses. And interestingly, Roosevelt appointed Joseph P. Kennedy, father of future President JFK, as the first SEC chairman. While controversial, Kennedy knew exactly where the bodies were buried, having made his fortune in the same unregulated markets the SEC now sought to clean up.
Yeah, you want to catch some thieves? Hire a thief.
You're right. And the act was transformative. It brought trust, stability to U.S. markets. And, I mean, we have seen just massive growth in the U.S. capital markets because...
I mean, what it really enabled was standardization and open, transparent markets. And so if you did anything, it had to be with your cards up. If you did anything that would be considered untoward, you had to do it with your cards face up on the table. You know, like if you wanted to take down a company and take a short position, you couldn't just like do some manipulation. You had to make a public example out of them and say, hey, these guys are doing this wrong. Here's why. You all should agree with me in the market. It's a lot more democratic.
And retail investors felt they trusted the market, and so they were able to enter the market.
Yep. Creates a lot of value just from people entering the market that wouldn't have otherwise.
Right, and that's good
the transparency rules also with the reporting meant that everybody got access to the same amount of information. Well, similar base amounts of information as everybody else. That one law is why you can do historical analysis of companies back to the 1930s, because otherwise the information wouldn't be publicly available.
Yeah. And so,
standardized.
Right. Every major piece of financial regulation since, Sarbanes-Oxley, Dodd-Frank, all controversial, builds on the framework established by this 1934 law. And, the SEC, they chased down Elon Musk's tweets, Robinhood outages, crypto fraud, maybe not anymore, but it's all on behalf of the Securities and Exchange Act of 1934.
The SEC is not perfect, but it's certainly better than what we had before.
Don't get me wrong. It's not like I love the SEC.
Yeah. Well, heck, I remember as a broker, sometimes you would get examined. And FINRA is not quite the same as it used to be, but back in the day, FINRA, Financial Industry Regulatory Authority, which is another regulatory agency, it's just an association almost that all the brokers belong to, separate from the SEC. What was nice about that self-regulatory body is they actually had an incentive to innovate and be responsive to their membership because they were a quasi-private entity. And they were the ones that came in with proper tools and analysis and would work with you on the audits to make sure you were doing all your reporting correctly and obeying all the laws. Versus if the SEC came in, they came in with pad and pencil and asked you a bunch of questions out of nowhere that made no sense and wouldn't respond to your inquiries if you asked. So you always went to FINRA instead. Yeah. So, the SEC isn't perfect by any means, but as in terms of establishing, setting the rules of the road, they're fantastic. So
maybe not always fantastic.
Compared to the alternative of not having them, they're fantastic.
Okay, I'll take that. I'll take that. Well, on that note, this has been the Capital Call. Thank you for listening. I'm Quinn Milligan.
And I'm Drew Milligan.
And we'll catch you next week every Monday morning. So until then, stay liquid.
Stay liquid.